All right, guys, we are live today. Forgive my dog Bruce for barking in the background. I'm not sure why he's barking so much. Let me get my headphones set up. Hold on one second. Today we have two pretty major earnings calls, three pretty major earnings calls. I'm genuinely disappointed in how they are scheduling earnings this quarter. They are doing all the big earnings on the same day, which is just ridiculous. It's unnecessary. They could have just, you know, they could have just done them on different days, give everybody like chances to absorb them. But for whatever reason, they're doing them all same day. We got Google earnings. We've got Microsoft earnings. We've got AMD earnings. All today. We're going to cover all of them live like we always do here. It's quarter four earnings. Let me know if you can hear the sound showing up. And again, we're going to try to cover all of these. So we'll do our best. But it's a big day for earnings. It's honestly a huge day. We'll get a. I'm eating some nachos here, so bear with me, guys. Can y'all hear the music? You should be able to. All right. All right, guys. So again, AMD expected at 77-cent profit. Microsoft expected at 276. Google expected at 160 EPS. We're gonna put all this up on screen. Let's put this up. Google expecting again 160 per share EPS on revenue of 85.26 billion for their Class C shares. Just make sure. Here's Google. Or no, I think their Class A shares is actually yeah, their Class A shares are what have the higher expectation. So we'll put that up on screen. We also have AMD. Microsoft earnings expected at 276 on revenue of 61.03 bill. We also have AMD at EPS expectation of 77 cents on revenue of 6.12 billion. All drop at 4 p.m. Let's put Rev up like this. We're gonna have to abbreviate Rev. Put this up. Big banner here, big banner. Let's close this out. Again, hit that like button, hit the subscribe button. We got a lot of stuff this week. This is a very, very, very busy week. Google at 5180s. Microsoft at 408s. Microsoft's just been churning up. We're going to cover Microsoft's full earnings call as well as Google's full earnings call as well, as much as we can. We're also going to cover AMD earnings when they go live as well. We've already had Tesla earnings come through. We've had GDP, PCE data. Today we had the JOLTS report. put this up on screen so you can see basically at what everything's expecting. We'll put a timer up as well. Let's get the timer up here, shall we? All right, we still got what? 47 and a half minutes. There we go. All right, so here's the closing bell. We got Google, Microsoft, AMD also today. Let's put all three of them up, really. I think we need to. AMD at 172.60s. AMD at 173s almost. Yeah. Yeah, we got the timer up. Where's the cheese sauce? Oh, bro, we got queso on here. Always gotta have queso, dude. You don't have queso on nachos. Like, what are you doing with your life? Cheap or expensive is subjective, James. What do you think? Is it cheap or expensive? I don't know. Whatever you guys think. All right. But we got Google, guys. AMD, Microsoft, all dropping today. All dropping today. Again, let me know what you guys think about this. We can zoom in here. Look at the stocks. Again, you see Google on the left, Microsoft in the middle, AMD on the right. They all have a very similar trend today. Very similar trend. AMD on the right side at 172s. Microsoft at 408s. Again, Google at 152s. All right. Let's look at the EPS graph. All right, so here is Macro Trends Alphabet EPS graph. Remember, EPS is a gauge on profitability. Google, starting in 2023, has had consecutively better and more profitable quarters. The lifetime highs of quarter profitability is 154. And so if Google comes in at 160, what the expected number is, that will be its highest quarterly revenue ever. If it comes in at 160, which is what is expected for Google. All right, so again, they have the chance to come in at their highest quarter ever in terms of EPS, which is margins or profit. So let's take a look at their revenue. Their revenue is expected, again, last time it came in at 76.69 billion. Today it's expected at 85.26 billion. So they are expecting their highest quarterly revenue ever for Google. Again, we'll see if we hit it or not, but they are expecting to break records with their expectations today in terms of revenue and EPS. Again, if they come in just as expected, it'll be their highest quarterly EPS, which is profitability, and revenue, which is kind of like ceiling potential. So interesting. Do you guys think they're going to break highs in terms of expectations, quarterly numbers? What do you guys think? All right, again, we can look at Google and see they're at 151.80s, 151.80s. Microsoft at 408s. AMD all the way up at 172.30s here today. Well, AMD is microchips. Microchips have been on a crazy run. And today's the day for microchips with Google, AMD, and Microsoft earnings all dropping live. All right, so had to eat my nachos. I haven't eaten since jiu-jitsu class this morning. Microsoft trying to break up. It's at 408.30s. Call options. I'm not sure what you guys want to do there. What do you guys think? Again, remember, Google. So here's the schedule today, guys. All right, so Google earnings call is scheduled for 4:30. And so at the closing bell, we're going to get Google earnings, we're going to get AMD earnings, and we're going to get Microsoft earnings. And then at 4:30, Google's going to have their earnings call. At 5 o'clock, AMD is going to have their earnings call. And at 5:30, Microsoft is going to have their earnings call. AMD's is technically scheduled to drop at 4:15 p.m. Eastern Standard Time for their earnings. So they're scheduled to be released about 15 minutes after the closing bell. Microsoft scheduled for 4:05 EPS and revenue drop. And then Google is expected right at the closing bell at 4 p.m. With their Class A shares expected to drop at 4, and their Class C shares, which is the symbol GOOG, expected to drop at 4:15. Today we also have Starbucks, EA, Juniper, Stryker, Match.com, Lending Club, Powell Industries, Manhattan Associates, Fortune Brands, and a bunch of other companies dropping their earnings at the closing bell today. The market's mostly red. We mostly had a red day, but again, remember, the SPY is completely flat on the day, and yesterday the SPY broke lifetime highs. So the SPY broke lifetime highs at 491.60s, and we basically hit that today. And so the new lifetime high is at about 491.50 or so. 491.50 is the new lifetime high on the SPY, or 491.49 to be exact. Again, Apple and some other stocks have been mostly weak today. Mostly weak. Tesla pulled back a little bit, but it's still green on the day. Delta Airline pulling back a little bit. But yeah, this earnings today, these earnings today mixed with the FOMC meeting tomorrow, mixed with Amazon, Meta, and Apple earnings on Thursday, mixed with Chevron earnings on Friday, mixed with unemployment and payroll numbers on Friday, means it's a very, 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 very busy week. This is one of the busiest weeks in history of markets because they've compacted every major earnings report into one specific week, which is this week. And so we've had a lot of people predicting crashes in markets. A lot of people have been making these big, bold crash predictions. If they're right, it's going to be something like this week. So if they're right, it's going to be something like this week. We'll see. Is there a metric that looks at the value of a stock versus inflation so we could try to compare previous price points versus the economy? There is. I can't remember what it's called. Salesforce is interesting. You see PayPal is paying off over 2,000 employees. I see PayPal being up. I'm in PayPal as well. PayPal's having a great day, and I'm in it. I hope it continues up. We're drinking that stevia cola. You know, Zevia cola. Zero sugar stevia Coca-Cola. It's got caffeine in it. That's why I drink it. But it's better than coffee right now. It's too late for coffee for me, but... All right, guys. So, busy day. What do you think about Salesforce? I like CRM as a company. I think they're young, but they're doing okay. They're not that young, actually. They started out as a penny stock in 2004. They've made a pretty big comeback, but laying off. Okay, gotcha. Yeah, I mean, lately, job vacancies and layoffs have been a bullish sign. a bullish signal in markets. It's something that we saw last year with like Facebook and Meta and Google and other companies laying off people, and then the market reacting positively, specifically their share price reacting positively, because it just means they're going to fix their margins a little bit more. Ultimately is what that means. Like they're going to improve margin capabilities and stuff like that by laying off people. The labor market is also seen an example of which in today's JOLTS job report, the labor market strength is seen as a negative thing right now. And so I think it's just, it's what people want to see. But remember, again, here is Google's revenue. Again, if they come in just simply as expected, they are expecting, Google again is expecting 85.26 billion. If they come in at 85.26 billion, they are higher than their revenue is going to be their highest they've ever reported for any specific quarter. And so again, Google has a chance to break records today, specifically in terms of revenue, with their revenue expectations. Or wait, let me make sure this is the correct symbol. It might not be the correct symbol, actually. Let me see. So actually, no, this is GOOG. Let me make sure we're looking at GOGGL. There we go. I fixed their revenue. Okay. Yeah, so again, even with GOOGL, we made the class, I get these mixed up. We made the class A shares show up on screen. So again, their revenue expectations are the same. So yeah, again, we come in as expected today for revenue. We're going to break records. Again, you can see that here specifically. 76.69 billion was their previous highest quarterly revenue ever. Today they're expecting 80 something. I think it's 85.26 billion. So again, they hit that. They're going to be their highest quarterly revenue ever. Same thing with EPS. Again, here's their EPS. Last quarter they did $1.45 EPS. Their highest one historically has been $1.54. Today they're expecting $1.60. And so again, if we come in just as expected for EPS, it'll be our highest quarterly revenue. And it'll be our highest quarterly EPS as well. So let's see if we continue. We will do a poll here today. Does the market end green? Or here, what do we do? Does Google break sales or break revenue records today? Yes or no? Does Google come in higher or lower than expected for quarterly revenue? For quarter four revenue is what we'll say. Higher, lower, as expected is what the question will be. All right. Again, we also have AMD numbers today. AMD. In 6 months, Apple has fallen 4%. Has it really? Uh, 6 months ago. So August. I mean, in August, Apple was $180. Apple's up relative to where it was in August. I mean, again, if you zoom in right when it was pushing up towards highs, at the start of August, maybe you could say that. But again, that's just selective price points. Apple, if you zoom out for the last year specifically, like if we look at the last year for Apple, it's had a powerful year. You know, it's up a huge amount over the last 52 weeks. Again, 52 weeks ago, it was at 140. It's now at almost 200. Pretty big percentage move overall over the last 52 weeks. And so maybe that's an argument for buying the dip. I'm not sure. I don't know. Everything shall be over expectations. Economy is peaking or no. AMD doesn't look good. Where's AMD at? AMD at 172s. Microchip relevance is going to be important today. Like how relevant is today's earnings going to be for microchips? I think it's going to be incredibly relevant and important to watch. Google has a very powerful looking, again, here is their EPS graph. This is what their EPS has looked like over the past 10 years or so. Very strong quarterly numbers. Here's their yearly 12-month EPS, very strong quarterly numbers. If we look at their revenue, again, their revenue graph arguably looks better, I would say. Really nice movement for revenue. And again, they're expected to break their highest quarterly revenue ever. And this is back since 2010, so this is the last like 14 years. Very, very strong revenue growth for Google. Again, we also see Microsoft starting to push up. Microsoft releases earnings at the closing bell. Yeah, I'm not going to say buy one, or I'm not going to say call or put. I have no idea what you should do. Yeah, we still got over 30 minutes until the reports drop. Got about 200 people here live already. So, again, hit that live button, hit the play button. We appreciate the numbers. And make sure to hit the subscribe button if you haven't already. Hit the live button. It helps support the channel. Look at Microsoft churning up. We still got to look at AMD. Again, AMD is a pretty big report today. Very relevant report. Let's do Google poll. Google has an AI as well. It's pretty solid. All right, so we're doing a poll on Twitter. Look at Microsoft, tapped over 409s, AMD pushing up. Still, you see this previous closing price, this light blue line. It's the red to green, green to red level. Let me make sure I can set an alert. Let me set an alert. Make sure we get the proper headphones in before the actual earnings call goes live. All right, got the alarm set, got the volume up. All right, so Microsoft over the 200 EMA. Look at Google here, though. Google on the left side is at 152. AMD at 173s. Why would you not bet on Google if I may ask? Yeah, Google's just a powerful company. Who will come out on top on earnings? Google, Microsoft, or AMD? Let me know in chat. Which company do you think is going to have the best price action after the earnings release? Google, Apple, or Google, AMD, or Microsoft? It'll be an interesting tell. I'm interested to see which one. Which one will outperform the other. I'm going to go with Google outperforming, but who knows? AMD microchips are certainly a potential factor. You know, AMD with big earnings could make it pump. Do you think Nvidia is going to hit 634? I mean, eventually. You know, that's the new lifetime high, 635, basically right under 635. Hit it today, earlier. Been a crazy market, man. Nvidia has one of the craziest long-term charts I've ever seen. You know, their yearly chart's insane. Nvidia opened up the year at 190. It's at 650 basically right now, 630s. 190 to 630s in 1 year. Crazy percentage returns. Microsoft, AMD, Microsoft, AMD, AMD, Microsoft. Maybe. All right, we asked people, most people said Google's going to beat. Let's look at our other poll. 51% think Google comes in higher than expected for earnings for Q4 revenue. And again, if Google comes in just as expected, they are going to beat their highest quarterly revenue ever. Yeah, so Microsoft had this deal with this company Mark, M-A-R-K, and look at M-A-R-K surge up to 150s on the news of the deal with Microsoft here. Microsoft's moving up a little bit, but it's nothing compared to this. This thing's gone up basically 300 and something percent up to 130s at 150s. Basically 400% from $30, 30 cents all the way up to 150, 30 cents to 150. 400% gain. That's a crazy big number. And again, we can look at AMD on the right side. AMD is trying to bounce up a little bit. We'll see if it holds. I get the 200 EMA view up. So yeah, there's the 200 EMA. Google's pretty flat and sideways though. Microsoft. Nvidia was at like 100 a few years back. Yeah, again, if we look at Nvidia numbers here, genuinely crazy numbers. Look at Nvidia. Look at a weekly chart. Genuinely crazy numbers. Look at this. Look at a weekly chart on Nvidia. One of the craziest charts you could ever see. Look at a yearly chart. Again, 190 52 weeks ago. Currently sitting at 630s. Honestly, AMD's chart's not that much different than this though. I mean, look at AMD yearly chart. Even Google's had a pretty good year too. I mean, Google opened up the year at 97, or not the year, but Google opened up last year at around 90 something bucks. Currently at 150, so very big percentage returns on all of these positions here. And yeah, today is the day of crazy earnings as well. We're at 409s right now, 409s on Microsoft. Google at 152s, almost 152s. Meta has a nice graph too. Yeah, Meta is one that proved me wrong. I was very skeptical of Meta. Specifically because I thought that Facebook was in trouble. But over time, it just proved, over time it just proved, it proved me wrong, certainly. Meta 52 weeks ago was 150 bucks. Basically, it's at 400 today. So well over 100%. Interesting. I'm getting your stream feed a good 1 to 2 faster on my PC connected with cable compared to my phone. Yeah, I mean, you're going to have a direct Ethernet connection is going to give you better speed for sure. I sold AMD too early, waiting to pick it up when it adjusts. Yeah, it's an interesting day, man. Again, I'm kind of disappointed because we got, I really, since I create content, I would much more prefer to have each of these stocks report on different days, like AMD Monday, Google Tuesday, Apple Wednesday, Meta Thursday. You know what I mean? I would much rather it be like that instead of all same day. It's just making this week even more crazy. It's making this week an absolutely crazy week. We got so much stuff this week. Every single day's wildly busy, ridiculous. With FOMC meeting, we've got non-farm payrolls and unemployment, we've got jobless claims numbers, we got Apple, Amazon, Meta, Google, Microsoft, AMD earnings, all the same week, all same days, 2 days. They're consolidated. All of those earnings are consolidated to 2 days. And so it's just going to be wildly volatile in markets, to be honest, just incredibly volatile in markets. All the big reports are dropping this week. We got the Fed rate hike decision too. A lot of people are, I hear a lot of people betting on a rate hike, or a rate cut. And I think that's obviously not going to happen, but yeah, crazy numbers right now. Again, the Q all the way up to 425s. And again, it's down today, but a lot of these broke highs yesterday. I don't think the Q did, but it got up there. I'm an AMD employee. Wish AMD can have a good starting year. Yeah, I mean, AMD, the question is how extended is AMD? You look at a 20-day chart for AMD, and, it's down a little bit, or it's about flat, right? Let's see. Or no, yeah, AMD's actually still had a really good start to the year. Back in January 1st, AMD was at, 140. Maybe a little bit higher at 150, but it's at almost 175 right now, so it's very good start to the year percentage-wise. What if AMD minus 30% after earnings? Do you think it's possible? It's possible. Whether it's probable is a different story. It could happen. I don't know if it will. It certainly could, probability and possibility are just different things. Lots of stuff's possible. It's possible for me to win the lottery 5 days in a row. Doesn't mean it's probable. And so again, AMD could drop 60%, 70%, 100%, you know, in a day. It's just not very probable, you know. Now that the dust is somewhat settled, I'm very curious. Do you think Garrett was cheated with Jack 4? Yes! I know a lot of y'all don't understand. This is a poker-related question. Of course he was cheated. They're talking about the controversy of Jack 4. Somebody made a ridiculous call that they should have never done. They knew the whole card somehow. Anyways, poker controversy. Average UPS driver to make $170,000 and pay benefits with new contract. That was 6 months ago. Today, a lot of people are getting laid off on UPS. All right, guys. So again, Google testing lows here. Microsoft pulling back to 408s. AMD still sitting at 172.50 here. Whew. All right, guys. Again, we got 21 minutes here. 21 minutes. You think Polestar is the future? Yeah, but that light doesn't mean anything, dude. I mean, they're cool lights and all. I like the idea of the lights. But you shouldn't buy 20,000 shares of, that's like $45,000. Again, the problem with Polestar, the argument against it is very simple. Who wants to buy it? Not shares, the actual car. Who's going to actually buy a Polestar vehicle? What's the consumer base look like? I think that's the problem with most up-and-coming brands in EV is that they just don't have enough customers interested in actually buying them outside of investors in the stock market. You know, like you ask a bunch of Polestar investors, what are they going to say? They're going to say, oh, Polestar is the greatest ever. But if you take it out of if you make it independent to the stock market and you ask regular people, nobody even knows who they are, what they do. Most people you say, hey, buy an EV. They're going to buy a Rivian or a Tesla or one of the legacy brands like Toyota or Honda or Dodge or Ram, you know what I mean? Like they're going to buy legacy brands or the big boys. And so it's going to be a problem for most up and coming EV brands, you know. All right, guys, we still got 20 minutes. Now, isn't Polestar Volkswagen? I think that might make them have a little bit more potential just because they've got a big boy backing it. But I still think there's risks. What concerns me about AMD is their increased operating costs affecting revenue. Yeah, I mean, I feel you. All right, guys, we asked people, does Google come in higher or lower than expected for Q4 revenue? 55% say higher. 24% say lower, 21% say as expected. We also did a poll on another social media platform. Google reports Q4 revenue soon. Will they beat or miss? 78% say they're going to beat, 21% say they're going to miss. Let's see what AMD does. Again, AMD, Microsoft, they're all going to move each other. They might all move and have sympathy with each other. All right, guys. So again, most of tech has dropped this morning. Most of tech is dipped. Most of tech. Now, it doesn't mean that anything at this point in time, because again, while we've had dips like this in all the major tech brands, even specifically the brands that are dropping earnings today, it doesn't necessarily mean anything because they all have earnings after the closing bell. And so all of these could come in better, worse, mixed, good, bad. And today's losses could be completely taken out and we could rip up and break highs. Or on the other side of that, we could just drop drastically. And again, today's one of the most influential days in stock markets. Today, tomorrow, and Thursday are three of the busiest days and most potentially influential days in markets. Why? Again, today we have all these big boy earnings: AMD, Microsoft, Google, all dropping same day, all dropping within 15 minutes of each other, followed by their earnings calls. That's number one. Number two is today we also had the JOLTS report. Tomorrow we've got some big earnings tomorrow scheduled as well, if you didn't know. So again, tomorrow morning I think we have Boeing, MasterCard, Thermo Fisher, NASDAQ, Boston Scientific, and a bunch of other ones in the morning. And those are not even the big companies. We have QCOM in the evening, a bunch of other ones. But tomorrow we have the FOMC decision at 2 p.m. That's going to be an incredibly busy day in markets. Is the FOMC decision. It's the busiest stream we do on a regular basis here on this channel. And so that'll be fun and interesting to watch as well. And that's not even including like the ADP non-farm employment change, basically the prelim payroll numbers. Thursday, again, we've got jobless claims, non-farm productivity, S&P US manufacturing, PMI. We've got Amazon, Meta, and Apple earnings on Thursday. Some of the largest companies in the world. And then Friday, we also have unemployment coming out. We also have payroll numbers coming out, non-farm payroll. So just a very, very busy week. And again, who knows where we're going to be at the end of this. Right now, you can see Microsoft over 400, Google over 150, AMD over 170. The SPY broke lifetime highs yesterday, and we haven't really pivoted back from that. Just to give you some understanding in markets, the SPY is actually almost green on the day as well, even with the high breaks yesterday. SPY almost up to 500. And another big question is, will the S&P 500 break 5,000? It's certainly possible. With today's craziness, it's certainly possible. At least, if not today, maybe tomorrow, maybe the next day, maybe Friday. But it's certainly possible that the S&P could hit 5,000. The S&P 500 right now is slightly over 4,900. It's at 4,925.67. So almost up to 5K. That's another nuance of markets. And a lot of the time, technically, these big influential whole dollar levels like 5K or like 500 on the SPY can be kind of like magnets if we start to get close to them, which I would argue that we are. On the other side of that coin, a lot of people are going to be saying we're extended right now. A lot of people are going to be saying we're extended, we're up too much. Microchips are up too much is going to be their argument. And again, today's earnings are going to be a big tell. Remember, like I said, Google, if it comes in just as expected, it's going to be its highest quarterly revenue ever. If it comes in just as expected for EPS, it's going to be its highest quarterly revenue ever. And we also can look at AMD numbers. Let's look at Microsoft real quick. Let's look at Microsoft revenue. Microsoft is now the largest cap company in the world, beating Apple also. And again, if Microsoft... All right, so here's Microsoft's revenue graph. All right, so here's Microsoft's revenue graph. If Microsoft comes in as expected, which again, if you don't know what that is specifically at $61.03 billion. If Microsoft does that, it's going to be its highest quarterly revenue ever for Microsoft revenue. EPS wise, I believe it's the same thing. Microsoft EPS is expected at 276. Its highest previously one. Okay, so actually Microsoft's EPS is not going to be its highest ever. So again, its highest ever was actually last quarter at 299. And so Microsoft's not going to break records there. We can take a look at AMD and see if we're going to break records for AMD earnings potentially as well. Yeah, so I mean AMD, the highest revenue they ever recorded was $6.55 billion. AMD is expected 6.12. So yeah, the only one that's really expecting records on both sides is Google. Let's look at AMD EPS graph. See what that looks like. Okay, so AMD is at a much, let's just call it a much less stable trend. Yeah, so again, here's AMD's EPS. Their highest ever was 150. They are expecting 77 cents. So yeah, they're not coming towards records here. Google's the one that might potentially break records. Again, we got 13 minutes here, team. 13 minutes. Lending Club is reporting tomorrow. Or no, it's reporting today. They're expecting a 2-cent profit. I don't know what they're going to do. They're a pretty small company. Microsoft starting to churn up, though. You know, again, here's the previous closing price for Microsoft. AMD's previous close is way up there. So is Google's. But it's up there. We'll see if it hits. Can AMD break out 200 today? I could. It probably won't, but it could. Again, is that probable? Probably not. Sorry, left the live for a bit. Do you think Google is going to beat earnings or not? I don't know. Nobody does. It's all just a coin flip. Nobody really knows whether they're going to come better or worse than expected. I mean, I can make a guess and have a 50% chance of being right and then try to act like I know what I'm talking about if they do come in and what I expected. But again, it's just a random guess. Nobody freaking knows whether they're going to beat, miss. The only people that know are insiders, and we have to just wait to... Instead of trying to predict earnings, it's always better to have a reactionary mindset with this type of stuff because, again... Truly nobody knows whether we're going to come in better or worse than expected, you know, or anything like that. And so, what are you in? I'm in Google. I'm in Microsoft right now. So I'm holding Google. I'm holding Microsoft. I'm in a bunch of stuff. Again, my TOS portfolio, which is the charts that you see, has like 60K in it. You know, we get 6 figures in buying power, certainly, and we're holding, you know, a decent little portfolio. We're only, you know, we're sitting on cash, but we're also, you know, sitting on a decent portfolio of about 30 stocks. About 30 stocks. We're red on the day, but overall we're green on the portfolio. Yeah, guidance is going to be a big question today. Brock says it depends on guidance from AMD. Demand for AMD chip is definitely good, but valuation is already quite high for sure. What are people saying for AMD and Google? Look at the poll. We got a lot of polls going live right now. We got polls on Twitter. We got polls on YouTube. We got about 200 votes on this one. 56% think Google's going to come in higher than expected for earnings. Higher than expected. You know, we also did a poll on Twitter. 71% think they're going to beat. 29% think they're going to miss. GameStop trending right now. All right, guys. Again, Microsoft testing the volume-weighted average price, holding at that. You want to know why I watch the 200 EMA? I must say this 5 times a day. You want to know why I watch this level? Look at this. How can you not like this level? Like, look. If you don't watch the 200 EMA, look at it on AMD. Right? Look at it on Google. All right? You want to know why I watch it? Look. Like, look at how many confirmations the 200 EMA gives you. It breaks over it, it holds support and bounces. It dips down, it rejects off of the 200 EMA, rejects off the 200 EMA, rejects off the 200 EMA. John Madden's, you know, we're like John Madden. Maybe I should change my trading name to that. Anyways, but yeah, watch the 200 EMA. It's just a powerful indicator. I can't really fake what I'm showing you. It's just my own preference. I can't guarantee you're going to make money. Nobody can. "13 days ago, PayPal CEO said we will shock the world. Today, they fired 9% of their staff, 2,500 employees, and they're actually up pretty decent percentages today alone. Actually, they're completely neutral today. I'm sorry. Yeah, I mean, they opened pretty red, and then they rebounded back up. Now they're kind of straddling that previous closing line. But again, microchip craziness is what we got going on today, guys. You guys ready? We got 8 minutes here, 8 minutes until the closing bell. Be ready. Here we go. You guys ready? All right, Google just broke lows ahead of this earnings release in 8 minutes, 7 minutes. Google just broke lows, guys. Again, slap the sub button, hit the notification bell. I appreciate it. How would you use the 200 EMA using a 5-minute chart or daily chart? What's the difference between Alphabet Class A and Class C shares? Some of them have voting rights, others don't. So some shares have voting rights, others don't. That's the difference between Class A. And so Class C shares are shares given to employees or investors with varying restrictions and voting rights. So yeah, it just depends. You know, Class A shares are better shares. So the GOOGL shares are a little bit better versus Class C, which is GOOG, right? So it just depends. It has to do with voting rights, who it is, whether it's employees, insiders, executives. Voting rights are based around those things because, again, employees, executives, owners are going to have more power in their shares versus, you know, me, you know, if I buy Google or whatever. So it just depends on what kind of share it is. How would you use 200 EMA? I would just look at it as I would use it as two different things, Solman. A trend indicator and a major support and resistance milestone level. Right, so I'm using it as a trend indicator. If we're maintaining under it for a decent period of time, you could say we're in a downward trend, vice versa, over it. Or if we move towards it, it's a milestone level. Like if we move towards it, break over it and hold, that's a breaking and holding over a milestone level. That's a positive, optimistic sign. All right, guys, we still got 5 minutes, 5 minutes. Polls. Top 3 polls in the world right now. Depends on guidance from AMD. Demand for AMD chip is definitely good, but valuation is already quite high. 100%, yeah. All right, guys. 5+ minutes. Again, AMD at 172s right now. 172s. Microsoft dipping down. A lot of bearish action in stocks ahead of this. Maybe this is insiders that know something that we don't. Look at Google breaking lows. It's at 151s right now. 151s. AMD less influenced by the bearish action. Microsoft had a pullback over the last 5 minutes as well. Now, none of this means anything because the numbers can come in good, bad, high, low, and it'll completely cancel out any small moves like this that happen before the closing bell. But again, remember, it's a very busy day. And again, you could look at something like regular Google shares, GOOG. AMD likes to follow Nvidia. Yeah, I mean, they're all microchip related stocks or people taking profit. Could be people taking profit ahead of earnings. Jobs. I mean, yeah, jobs is probably the main reason the market's dipping down some versus, you know, what it's done. But yeah, here we go, guys. Here's the closing bell. I'm sorry, I got the sun in my face. But here we go. Here goes the closing bell today, guys. We got the closing bell coming up soon. Hit the like button. Hit the subscribe button. I appreciate the love. Thanks so much. We got about 500 people here live. I'm also going to throw this bad boy into sub-only mode, so if you have not already, hit the subscribe button, hit the notification bell. Just try it one time. It might feel good. We don't charge a penny for anything. Every major earnings report we cover live here on this channel. We don't sell a course, don't sell a service, don't claim to be experts, don't act like a guru, and we give everything away for free. And so if you haven't already subscribed, I appreciate the love. Thanks so much. Let's keep the growth up. Google earnings, AMD earnings, Microsoft earnings dropping in about 3 minutes. About 3 minutes. So basically, Vincent, the big words intimidate you because you don't know what they mean. Trading's really jargon filled. It really is. It's really jargon filled. What you gotta understand it. It just takes a little bit of time, brother. It just takes time, dude. Yeah, bro. This freaking window right here, dude. You see this window up here, bro? This freaking window right there. That window's a problem. And here's my office. You want to see my office? You know, like that window is a problem. You know, I dislike that window. Now what do? I got the sun in my eyes. I'll be playing with AMD. All right, guys. 2 minutes. 2 minutes. And again, all right, so just to give you the schedule here, team. Just to give you the schedule. AMD scheduled for 4:15 release. Google expected right at 4 p.m. for Class C shares. Or no, I'm sorry, right at 4 p.m. for Class A shares. So GOOGL shares are scheduled to release theirs right at the closing bell at 4 p.m. Now, they might be late. Google numbers, the regular Class C shares are expected at 4:15 Eastern Standard Time. We got Starbucks today. We got EA. We're going to cover all of these live, so don't worry. We're going to cover all of them regardless of anything. But we're going to focus on AMD, Microsoft, and Google, of course, specifically Google. Look at Microsoft bouncing, Google bouncing up a little bit. It is time, guys. We got a minute and a half. Also, make sure you hit the live button next to the play button. You want to make sure you're fully caught up on stream. You want to make sure your live button looks bright red. Bright red. You can also put it in fast forward mode, and you'll mostly be caught up. There'll be very little delay. Very little delay. So hit the live button next to the play button. Make sure you're fully caught up. We got 1 minute here, team. 1 minute before the big boy earnings drop. And again, give me your last minute predictions. Will we have good action, bad action, better than expected, worse than expected? Will AMD do well? Will Google do well? Will Microsoft do well? Give me your last minute predictions in chat right now. Let me know. Let me know how you feel. I'm curious. Have you tried monetizing your live feeds? What is monetization, bro? What is that, dude? Monetize. I don't even know what that is, you know? It sounds like money, but like, I just don't know, bro. I don't know, man. Let me know what you guys think. We got 30 seconds here. 30 seconds, guys. This timer's a little bit off. We got 20 seconds now. Here we go. Get ready. All right, here we go, guys. 15 seconds. 15 seconds. All right, here we go. Here's the closing bell. Watch these stocks closely. You'll know the earnings are out because you'll see big, drastic movement. There goes Google. Very big dip in Google. Let's see if they're out yet. I don't know if they're out yet. Maybe it's just volatility. All right, guys, we're waiting. Google's still at 151s. Microsoft hasn't really moved much. AMD hasn't really moved much either. Be ready, guys. Be ready. I'm looking on their site. I don't see anything for Google. Nothing yet. Waiting, guys. We're patiently waiting. Again, subscribe if you haven't yet. All right, we're at 150.5. 150.5. All right, Microsoft, guys. All the way up at 415s for Microsoft. All the way up at 415s. Are they out yet? Let me see. Microsoft all the way up for 415s. I'm looking, guys. I'm looking. Bear with me. Hold on. I don't see anything. Microsoft had a deal, but I don't see anything out yet for Microsoft. Is Microsoft out? Okay, Microsoft just dropped. Second quarter revenue, $62 billion, higher than expected. Second quarter EPS, $2.93, higher than expected revenue at $62 billion. They expected $61.03 billion. Their EPS came in at $2.93. They expected $2.76. So Microsoft better than expected here, EPS and revenue. And they're now dipping down. Intelligent cloud revenue came in at $25.9 bill. Productivity and business revenue came in at $19.2 bill. Again, the other ones are now. Microsoft's actually out already. We'll put this number up on screen. But yeah, again, they did better than expected for revenue and EPS. Intelligent cloud revenue came in at $25.9 billion. LinkedIn revenue up 9%. Azure and other cloud services revenue up 30%. Services and other revenue at $43.08 billion. Intelligent cloud revenue or cloud operating income at $12.46 billion. But for whatever reason, they're gapping down here. They're at 407s. 407. Still waiting for Google numbers. Look at Google start to churn. Microsoft break it down here. Microsoft numbers, will put them up on screen. There goes Google. Google break it down under 149s right now, under 149s. We're going to put Microsoft's numbers up in chat, everything like that up in chat right there. Google starting to flush down. It's at 147.80s here, 147.80s. AMD hasn't moved a peg yet. They're scheduled to drop at 4:15, so they might be a little bit late. Nothing for Google yet that I see. But again, Microsoft started to break down. All right, Google, 164 EPS versus 159. Revenue of 86.3 billion, 86.31 billion. They expected 85.3. So Google come in better than expected for both. We're going to put them and Microsoft up on screen so you can see it better than expected for both EPS and revenue for Google. There's the numbers right there. Google breaking down, flushing down at 146, 146.60s. Microsoft at 406. AMD hasn't dropped theirs yet. Still waiting for the other ones though. But according to this, Microsoft BDPS B revenue, Google BDPS B revenue. Yeah. Google BDPS B revenue. Waiting for all the full list of metrics here, so bear with me, team. Both of them are reacting negatively, though. So, okay, so far Google is reacting negatively. It's at 143s, 144s. Microsoft hasn't really moved that much from this report. So, again, Microsoft hasn't really moved that much from this report. It's all the way down at 404s. Google at 144s. Yeah, so again, Google did better than expected EPS, better than expected revenue. We're looking for guidance numbers in both of these. Again, Google better than expected. Let's look at Microsoft guidance. But they're all breaking down. AMD finally starting to move a little bit. We're still waiting on AMD's numbers to see how they're going to impact everything. But yeah, Google down to 144s. Microsoft starting to churn up a little bit, and then we're coming all the way back down. AMD still sideways and flat. We're still waiting for AMD's numbers to drop here, team. All right, so we're going to close this poll down since we already got the answer. All right, so again, we've broken down a little bit even on good EPS and good revenue for both Google and Alphabet and Microsoft. So again, better than expected EPS, better than expected revenue for all of them. You can see those below me on screen right now, right around this area. AMD's starting to move. It's at 171s, but both of them have reacted negatively to beats in EPS and revenue. Both of them has reacted negatively to beats in EPS and revenue. We'll see what guidance shows up as. We're still waiting for the guidance numbers here to show up on the chart, so bear with me. All right, so again, Google. I'm going to put some of the metrics for Google up on screen here, guys, in chat, so bear with me. Fourth quarter Google advertising revenue came in at 65.52 billion, 65.52 billion. We did get Starbucks numbers. Starbucks missed on EPS, 90 cents versus 93 cents expected. Revenue of 9.4, expected 9.58 bill. Again, we're putting the numbers up here for Google. We're just dropping these numbers in chat right now. Operating margin 27%. Google search and other revenue at 48.02 bill. There goes AMD. AMD gapping all the way down to 169s. Right now, 169s. While we have Microsoft starting to climb back here. Google services revenue at 76.31 bill. Put that up in chat here. Cloud revenue 9.19 billion. Operating income 23.7 bill. Put these numbers up on screen. Again, AMD down to 170s. We're starting to get some rebounds here. It's pretty flat earnings report relative to the moves that they've made over the last couple weeks, months, really. So it's a little bit underwhelming of a reaction. We did have EA numbers. EA showed up at 920 or at 296 Adjusted EPS versus 293. Where's revenue? Net booking is at 2.37 versus 2.33. So EA had better than expected results. Did AMD release? Let's see. I don't see AMD's out. AMD's are technically scheduled to release in about 7.5 minutes. 7.5 minutes for AMD numbers. So again, they're probably just moving, I guess, in sympathy with the other tech and microchip stocks like Microsoft and Google. Yeah, I mean, the whole market's up. The E-mini and the S&P 500 broke highs yesterday, right? So the E-mini and the S&P 500 broke highs yesterday. And so, yeah, I mean, we'll see. I'm holding a little bit of Boeing. We took profit a couple days ago, but we're still holding a little piece of it, and it's down on the day. But, you know, again, most of the market's so high up that it doesn't matter. All right, so again, we're consolidating after earnings. AMD hasn't really done much. Hasn't really done much. And if you stick around, we are going to stream the entire Microsoft earnings call going live in about 20 minutes. So stick around. We are going to stream the entire earnings call live here as well, like we always do. Put the timer up. Call it 21 minutes. All right, again, we are going to stream the full earnings call live. I'll put this up on screen so you can see it. All right. Sell the news. Yeah, it could be by the rumor sell the news event. And again, stick around. We're going to stream the entire Google earnings call live on stream if you haven't seen it already. So the entire Google earnings call live on stream. Stick around. Again, if you haven't already, hit the subscribe button. All right, so again, AMD earnings all the way at 169.50, guys. All the way at 169.50. All right, guys. Again, pretty flat for Google. Pretty flat for Microsoft. We're still waiting on AMD earnings, which are scheduled to release, guys. AMD earnings are scheduled to release. Again, they're scheduled to release at 4:15 market time. So we still have 5 minutes or so, a little bit less than that, until these numbers are actually technically supposed to drop. Will Google and Microsoft rebound? Or will Google react positively to their earnings call? All right, guys. So we got big numbers here. Vote on the poll. Also, guys, if you haven't already, check out TopStep. TopStep is a funded program in futures. They give you a demo. They test your skill. And if you could pass the test, they fund you in the futures market. And if you look at, like, here's the reason a lot of you guys should be day trading futures instead of stocks. All right, if I look at Google, for instance, and then I look at the SPY, I can day trade. Here's the E-mini. Here's the futures contract, the legit futures contract. It looks very, it looks very similar. I always say blue chip stocks move a lot with the S&P 500. I can trade this middle side in futures, no PDT rule. I can day trade short, buy market, sell market in futures, no PDT rule. The most legit funded program is TopStep. They give you a demo. They test your skill. If you can pass the test, they fund you. If you can't pass the test, and again, remember, I'm terrible at this stuff. I have no idea what I'm talking about. no idea what I'm talking about. Top Step's a sponsor of mine. I'm incredibly biased in their favor because they pay me money. Always remember, I'm terrible at this stuff. I have no idea what I'm talking about. But if you want to check out a funded account program in futures, taking the challenge generally builds your skill. The base one's only $49. The top one is only $150. They give you a demo and they test your skill. The base one, you got to make $3K in profit without losing $2K. If you can do that successfully, they fund you the same amount, $50K to $150K with a 90%. So you're keeping most of your profit with a 90% split anyway, but if you lose, you're losing much less. It's a great way to learn how to trade. They've got free funding coaches, and they're the most legit one in the world. They pay out millions in actual withdrawals every year. They fund thousands of traders a year. Now, again, they are a sponsor of mine. I'm super biased in their favor, and most day traders lose money. Remember that. But if you want to check them out, here is the link. Great way to help support your boy in this channel. Hey, thank you, Joseph. I appreciate you, brother. Thank you, man. All right, guys. Google earnings call 4:30. You guys ready? We got the Google earnings call 4:30. We're going to stream the entire thing live. 4:30 p.m. Still waiting on AMD numbers in 12 minutes, guys. Still waiting on AMD numbers. The only money they take is what you pay for the combine. So if it's the $49 one, if you want to try it again, you got to reset for $49. Look at the Microsoft starting to rebound here. So here's Microsoft starting to bounce back up. Microsoft almost green on the day. Microsoft almost green on the day. Let's see if there's a report here that's influencing this. Again, we had EA. Still waiting on AMD numbers, which are scheduled to drop in 2 minutes. Microsoft earnings beat across the board. Cloud, AI drive momentum. Azure and other cloud service businesses posted revenue growth with Microsoft at 28% on a constant currency basis in the fiscal second quarter. Analysts expected Azure constant currency revenue growth of 27% for the period. So again, Microsoft killed it with their numbers. They're technically green on the day as well. Let's see if this drags the rest of tech up. We're still waiting on AMD's numbers. And so again, we're still waiting on AMD's numbers. All right, guys, we do have Microsoft now technically green. Technically, we're supposed to have AMD's numbers in 30 seconds. 30 seconds is what the number is supposed to be for AMD's numbers. 30 seconds. The Microsoft earnings call is in 15 minutes at 4:30. We got the timer up. We're going to stream the whole thing live. For Google earnings call, I mean, not Microsoft, I'm sorry. Google's earnings call is at 4:30. AMD's earnings call is at 5 p.m. And Microsoft's earnings call is at 5:30. All right, guys, Microsoft at 414s here. Google's still trying to bounce back. Look at Microsoft. There goes AMD dumping down to 165. I believe AMD's numbers are out. I'm pretty sure AMD's numbers are out. Again, AMD did drop their numbers. Fourth quarter 2023, 6.2 billion revenue. 6.2 billion revenue for AMD. They expected 6.12, so higher than expected quarterly revenue for AMD, higher than expected quarterly revenue, 77-cent EPS. So they came in as expected for EPS, higher than expected for revenue for AMD. Again, as expected for EPS, higher than expected for revenue that I'm seeing right now. Yeah, so that's exactly what it was. Higher than expected revenue at 6.17 versus 6.12 expected. Here's Google right here, or here's AMD numbers. So AMD had better than expected revenue, neutral EPS. And yeah, there's their numbers. They're starting to rip up too. Look at this. They're up to 167 right now, 167. Your monitor going to drop, bro. That red candle too big. I know, dude. Listen, I'm scared right now. Microsoft's starting to pull back a little bit. AMD all the way back up, has completely retraced that scary, scary red candle, has completely retraced it all the way back up. Let's see if it continues moving here. Microsoft just went red again on the day after breaking over the previous closing price and going green. Microsoft completely red on the day now. Right around that 200 EMA, though. Let's see if it bounces there. Google is pretty stagnant. Dipped down and has been sideways since then. But again, Google's had a great year. You You know, it's Google, to put it into perspective, is only right here now. So it's not like it's having some crazy catastrophic event. It's had a very powerful year for Google. And again, we got their earnings call starting in 13 minutes. 13 minutes. All right, guys. You guys ready? Again, we are starting to break down in Google. We're at 145s here, 145s. Microsoft at 408.60s. AMD at 169s, at 169s for AMD. We got 13 minutes. Google completely flat on the day. You can see this light blue line is the previous closing price. It's the level at which it goes from red to green, green to red. Microsoft just tapped it. It's still technically under it though, so Microsoft is still technically red on the day. AMD, guys, at 171s right now, 171s. Google flat. AMD not really reacting as poorly as a lot of people thought they might. Yeah, we don't really have much other data from AMD, though. We didn't really get much else data dropping here. Again, Microsoft completely flat. AMD down to 169s. Again, the AMD numbers are right here in chat, guys. The AMD numbers are right here. Let me put them up. This is AMD's numbers right below me right here. And again, if you haven't already, check out Top Step, funded account program and futures. Again, they give you a demo and they test your skill. Here's me on one of their combines today. And again, we're already funded in 2 accounts. If I make $3,000 in profit on this account, then they fund me $50,000 with a 90% split. And again, if I take that funded account and make 10K, I get to keep 9,000 of that. They get to keep 1,000 since they're funding me that money. They got free funding coaches, tons of great resources. And again, the futures market looks a lot like the stock market. Again, if you look at the E-mini, it's basically the SPY price action. And it looks very similar to like Google. Look at Google on the left and look at the E-mini on the right. Look at AMD as well. They look very similar, but I can day trade this middle one in futures. No PDT rule, day trade short, very similar to day trading stocks. There's just no PDT rule. And so again, they are a sponsor of mine. Check them out right here if you want to help support the channel and support your boy here. There's the link. Yeah, the next 2 months are going to be crazy because really the rest of this week's going to be busy. This is just the start of a crazy week. This is really just the start. We got so much different stuff coming out this week. Again, non-farm payrolls, unemployment numbers on Friday. Tomorrow we have the rate hike decision. We've got Apple, Amazon, and Meta earnings on Thursday. Jobless claims on Thursday. Manufacturing PMI tomorrow. Boeing earnings tomorrow. We just got every day is very busy, very volatile. Google kind of chopping sideways here. We still got 10 minutes before Google earnings drop. The actual earnings call for Google drops at least. I don't know. Most of these beat numbers. The only one that didn't beat both major metrics is AMD. It came in neutral for EPS. Again, EPS is profitability. It's earnings per share. Revenue is kind of the ceiling. Like, you know, it's how much money they're bringing in. And so both Google and Microsoft had better than expected EPS, better than expected revenue, but they're both down. On the day, technically they're both down relative to when earnings came out as well. The only one that didn't beat on both was AMD, and it's looking a little bit better than both of them right now. So again, I always try to tell people the same thing. If the market was that easy to make money, we'd all be rich, right? If it was easiest to sit around and wait for a company to have good EPS and revenue and then just buy it up and click buy, everybody would freaking do it. Literally everybody would do it. You know why everybody's not rich? Is because it's not that easy. Sometimes a company will have better than expected revenue, better than expected EPS, better than expected guidance, and drop 10%. Because it all has to do with what the stock price is currently, and a lot of the potential outcomes are already baked into the price, if that makes sense, right? So it's much more nuanced than just waiting for a company to have good or bad EPS and clicking buy. I wish it was that easy, I really do, but it's just not like that. That's why I always try to tell people, trying to predict it is a moot point. Like, you can react to it, but trying to predict these things is incredibly difficult. It's almost certainly not going to be what you predicted. Again, AMD starting to churn up. It's at 173 right now. Just broke highs of pre-market or extended hours. AMD still breaking up, though. It's at 174s right now, starting to make moves. AMD at 174.30s here, guys. 174.30s. All right, guys. Again, AMD churning up. It's at 175 right now. Microsoft at 407.80s. Google at 145.40s. So again, we will see if we get some new moves up here, team. Again, if you haven't already subscribed, we appreciate the love. Let's see if we can keep pushing here. We got the Google earnings call in 6.5 minutes. 6.5 minutes. AMD did break highs of extended hours, after hour highs, at 173s right now. Give me your last minute predictions. Vote on the poll right now. If you look at the poll here, will Google react positively to their earnings call? Yes or no? Vote on the poll. We got 500 votes already. 61% say yes, they will react positively to their earnings call. 40% say no. So we're at a 60-40 split. Influence that by voting on the poll. We appreciate the love. I'm using TOS for charts, but on Top Step I'm using Quant Tower, so it just depends. Yeah, AMD starting to reel back up. Let's see if it influences microchip and tech. All right, let me switch my headphones out here. We got some charged. We're charged and ready for these, man. All right, we still got about 1,400 people here live. Did we break 123,000 subs? We should have. We're pretty close. I'm pretty sure we're close. We only need, yeah, we're close. All right, so we are pretty close here. Again, hit that subscribe button. Listen, I don't charge for anything. Everything I put out is completely free. We cover all the major earnings reports, all the major economic reports, unemployment, jobless claims, retail sales, FOMC meetings, Jerome Powell press conferences, all the major earnings reports live on stream in one place. And so again, if you want a one-stop shop for all of that stuff, we're live every day, basically covering all the major stuff. If you're wondering if something's going on economics or markets wise, we are going to cover it if it's big. And so again, hit that subscribe button, hit the notification bell, join the stream. We stream live every day. Nvidia numbers don't drop until late next month, unfortunately. Nvidia is moving a little bit though on the upside with all this stuff. Hey, just a sound check. Can y'all hear the music right now? Can y'all hear the music? Put my savings in Google a week ago, so I hope it goes well. Hey, good luck, brother. Can't have an AI company with good earnings go red. Not necessarily. I mean, again, these moves right now, just to put this into perspective, guys. All right, y'all have to understand this. These moves right now, as pronounced as they might look when we zoom in, all of these moves, including AMD, including Google, including Microsoft, these downside moves are very insignificant. These are very small. These are nothing right now. Like when you zoom out and look at long-term charts, again, let's look at a 20-day chart. That's a 20-day chart on Google. And so we haven't even given back half of this 20-day chart. Like we're still at 145 and the market doesn't go straight up. The market does a stair step. It goes up, pulls back, stair step. Like that's what the market does. Now, it doesn't mean it's going to do that. We don't know what it's going to do, but I guess my point is like, this doesn't mean the sky's falling. This is a very minor move relative to other earnings reports even. And so maybe the earnings call will come in good. A lot of people are watching AMD. AMD's even smaller of a move, believe it or not. Can y'all hear the music is the question. Can you hear the music? Here, I'll turn the music up if it helps. Let me see if there's a volume meter. Yeah, there is. Can hear music? Yes. All right, good. Yeah, so again, when the earnings call starts in about 3 minutes, we're going to have to do a sound check. We're going to do a sound check for earnings just to make sure it's working and everything's smooth. Music of losses. Music to your ears, isn't it, Daniel? AMD, Nvidia, little brother. Yeah. All right, guys. Hey, we got, how many minutes we got? Earnings call starts soon, team. We got the earnings call starts soon. Again, there's Google numbers. Let's put this up on screen so we can see it. All right, again, we're going to create this. Again, the earnings call starting soon. All right. Let's get this ready here. Get this ready. Again, kind of a flat day for earnings. Or kind of flat since the earnings released. We'll put Google up since we're covering their earnings call, and we'll cover the rest of them as they drop. But again, 2 minutes here. All right, we got the Google earnings call going live soon here, team. Live soon. Let's see if they come in good. There's Google at 145s. We got a minute and a half left. You guys ready? I just want to make sure y'all can hear the music. Make sure y'all are caught up on the stream. And then, again, we're going to pivot to Microsoft earnings in a little bit. We're thinking about covering AMD earnings, too. It just depends. They need to say something positive to save my call options. Hey, well, good luck, bro. I hope they do for you, man. I'm in Google. I hope it goes up, you know. We'll see if it does, though. All right, guys. We got less than a minute here, team. Less than a minute. This timer is for the actual earnings call event. So you have the earnings that are released, and then you have the earnings call that goes live today at 5:30 is when the earnings go live, or 4:30, I mean. So again, we're starting to move up a little bit, but here is Google's earnings today, guys. That's Google's earnings. We'll put this up on screen, make it a little bit larger. No, I'm green on Google regardless of this. My average price on Google is 125s is my average price on Google, 125s. Here, let me mute the background so I can make sure to catch back up. All right, so we're sitting back waiting for the earnings call to start, guys. Bear with me. We're sitting down waiting for the earnings call to start. All right, guys, waiting for the earnings call to start. It should start any minute now. We're sitting on it live in the other screen, waiting for it to start, guys. So bear with me. Yeah, I bought AMD, or I bought Google a long time ago. So, you know, again, this drop is insignificant to me, too. I'm still very green in it. All right, here we go. I think this is about to start. Let me make sure.
For standing by for the Alphabet fourth quarter 2023 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's fourth quarter 2023 earnings conference call. With us today are Sundar Pichai, Phillip Schindler, and Ruth Porat. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. please refer to our Forms 10-K and 10-Q, including the risk factors discussed in our upcoming Form 10-K filing for the year ended December 31st, 2023. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Hello, everyone. Our results reflect strong momentum and product innovation continuing into 2024. Today, I'm going to talk about four main topics. One, our investments in AI, including how it's helping search. Two, subscriptions, which reached $15 billion in annual revenue, up 5x since 2019. Subscriptions is growing strongly, powered by YouTube Premium and Music, YouTube TV, and Google One. 3, cloud, which crossed $9 billion in revenues this quarter and saw accelerated growth driven by our Gen AI and product leadership. And 4, our investments and focus to meet the growth opportunities ahead. First, AI and search. As you know, we have long led the way in using AI to improve many of our products, from search to ads, to most of our consumer and enterprise products, helping billions of people already. Last year brought new excitement around Gen AI, and I'm proud of how we responded, responsibly with deep advances in foundation models and a number of great launches. We closed the year by launching the Gemini Era, a new industry-leading series of models that will fuel the next generation of advances. Gemini is the first realization of the vision we had when we formed Google DeepMind, bringing together our two world-class research teams. It's engineered to understand and combine text, images, audio, video, and code in a natively multimodal way, and it can run on everything from mobile devices to data centers. Gemini gives us a great foundation. It's already demonstrating state-of-the-art capabilities, and it's only going to get better. Gemini Ultra is coming soon. The team is already working on the next versions and bringing it to our products. That starts with search. We are already experimenting with Gemini in search, where it's making our search generative experience, or SGE, faster for users. We have seen a 40% reduction in latency in English in the US. I'm happy with what we are seeing in the earliest days of SGE. It's available through Search Labs in 7 languages. By applying generative AI to search, we are able to serve a wider range of information needs and answer new types of questions, including those that benefit from multiple perspectives. People are finding it particularly useful for more complex questions like comparisons or longer queries. It's also helpful in areas where people are looking for deeper understanding, such as education or even gift ideas. We are improving satisfaction, including answers for more conversational and intricate queries. As I mentioned earlier, we are surfacing more links with SGE and linking to a wider range of sources on the results page, and will continue to prioritize approaches that add value for our users and send valuable traffic to publishers. Beyond SGE, we are continuing to use AI to make searching more accessible and intuitive. Circle to Search lets you search what you see on Android phones with a simple gesture without switching apps. It's available starting this week on Pixel 8 and Pixel 8 Pro and the new Samsung Galaxy S24 series. And Lens now offers generative AI overviews. You can add text to a visual search to ask questions about anything you see and get AI-powered insights in the moment. In addition to search, we are also seeing a lot of interest in our AI-powered solutions for advertisers. That includes our new conversational experience that uses Gemini to accelerate the creation of search campaigns. Then there is Bard, our conversational AI tool that complements search. It's now powered by Gemini Pro and is much more capable at things like understanding, summarizing, reasoning, coding, and planning. It's now in over 40 languages and over 230 countries around the world. Looking ahead, we'll be rolling out an even more advanced version for subscribers powered by Gemini Ultra. That's a good segue to subscriptions. As I said earlier, it's now a $15 billion business annually. YouTube is the key driver of our subscription revenues. Available in over 100 countries and regions, YouTube Music and Premium have real momentum. They're engaging passionate users and driving great returns for the music industry and creators. YouTube TV is also doing well. We've had great consumer feedback on the viewing experience. People love the navigation, multi-view, and unlimited DVR. NFL Sunday Ticket has found its perfect home on YouTube, and Phillip will talk about that more. Let me also talk about our subscription service, Google One. It's doing incredibly well with strong user growth. It provides expanded storage, unlocks exclusive features in Google products, and allows us to build a strong relationship with our most engaged users. Google One is growing very well, and we are just about to cross 100 million subscribers. From here, we are going to bring in more AI features and look forward to more strong growth to come. Next, Google Cloud. Throughout 2023, we introduced thousands of product advances, including broad GenAI capabilities across our AI infrastructure, our Vertex AI platform, and our new Duet AI agents. In Q4, our product and GenAI leadership enabled us to win and expand relationships with many leading brands, including Hugging Face, McDonald's, Motorola Mobility, and Verizon. Google Cloud offers our AI hypercomputer, a groundbreaking supercomputing architecture that combines our powerful TPUs and GPUs, AI software, and multi-slice and multi-host technology to provide performance and cost advantages for training and serving models. Customers like Anthropic, Character AI, Essential AI, and Mistral AI are building and serving models on it. For developers building GenAI applications, we offer Vertex AI, a comprehensive enterprise AI platform. It helps customers like Deutsche Telekom and Moody's discover, customize, augment, and deploy over 130 GenAI models, including PaLM, MedPaLM, SecPaLM, and Gemini, as well as popular open source and partner models. Vertex AI has seen strong adoption with the API requests increasing nearly 6x from H1 to H2 last year. Using Vertex AI, Samsung recently announced its Galaxy S24 series smartphone with Gemini and Imagen 2, our advanced text-to-image model. Shutterstock has added Imagen 2 to their AI image generator, enabling users to turn simple text prompts into unique visuals. And Victoria's Secret & Company will look to personalize and improve the customer experience with Gemini, Vertex AI Search, and Conversations. Customers are increasingly choosing Duet AI, our packaged AI agents for Google Workspace and Google Cloud Platform, to boost productivity and improve their operations. Since its launch, thousands of companies and more than 1 million trusted testers have used Duet AI. It'll incorporate Gemini soon. In Workspace, Duet AI is helping employees benefit from improved productivity and creativity at thousands of paying customers around the world, including Singapore Post, Uber, and Woolworths. In Google Cloud Platform, Duet AI assists software developers and cybersecurity analysts. Duet AI for developers is the only GenAI offering to support the complete development and operations lifecycle, fine-tuned with a customer's own code corpus and policies. It's helping Wayfair, GE Appliances, and Commerzbank write better software, faster with AI code completion, code generation, and chat support. With Duet AI in security operations, we are helping cybersecurity teams at Fiserv, Spotify, and Pfizer. Our robust growth has been driven by strong direct and indirect channels. With ISVs, we have nearly tripled the number of co-sell deals from 2022 to 2023. In our ecosystem, there are nearly 90,000 Google Cloud GenAI-enabled consultants, and Accenture has teamed up with Google Cloud to create a joint generative AI center of excellence. Next, let me turn to our focus and discipline as we pursue the opportunities ahead. Search, YouTube, and cloud are supported by our state-of-the-art compute infrastructure. This infrastructure is also key to realizing our big AI ambitions. It's a major differentiator for us. We continue to invest responsibly in our data centers and compute to support this new wave of growth in AI-powered services for us and for our customers. Through this, we are being disciplined in how we run the company. You've heard me talk about our efforts to durably re-engineer our cost base and to improve our velocity and efficiency. That work continues. Teams are working to focus on key priorities and execute fast, removing layers and simplifying their organizational structures. As just one example, our devices team has brought together different teams from across Nest, Fitbit, and other teams into a new functional structure. This will help us pool resources and drive progress across our Pixel portfolio. Across different teams, we have wound down some non-priority projects, which will help us invest and operate well in our growth areas. We are also improving our machine utilization, building on our years of experience in driving cost efficiencies in our computing infrastructure and operations. And through our supplier efficiency efforts and automation of certain processes, we have made major improvements in areas like procurement, achieving significant savings. That's a snapshot of the quarter. Before I close, a couple of other highlights. Pixel 8, our AI-first phone, was awarded Phone of the Year by numerous outlets. It now uses Gemini Nano with features like Magic Compose for Google Messages and more to come. In our Other Bets portfolio of companies, Waymo, which is deeply focused on safety, reached over 1 million fully autonomous ride-hailing trips. And Isomorphic Labs entered into strategic partnerships with Eli Lilly and Novartis to apply AI to treat diseases, which has great potential. 2023 was a year of profound innovation and product momentum. Thank you to our many partners. We succeed when our partners do, and we are grateful for the work we do together. From our partners across the Android ecosystem who are on display at CES, to our deep relationships with retailers, small businesses, and advertising partners, to the next generation of AI startups and developers, and many more. I also want to thank all of our employees for their hard work throughout 2023 and the start of the new year. I'm excited for what's ahead in 2024. Phillip.
Thanks, Sundar, and hi, everyone. Google Services revenues of $76 billion were up 12% year-on-year. In Google advertising, search and other revenues grew 13% year-on-year, led again by solid growth in the retail vertical. We had particular strength in retail in APAC, a trend that began in the second quarter of 2023 and continued through the end of the year. YouTube ads revenue were up 16% year-on-year, driven by growth in both direct response and brand. And network revenues declined 2% year-on-year. In subscriptions, platforms, and devices, which was previously named Google Other, year-on-year revenues increased 23%, driven by strong growth in subscriptions. Now for some color on the quarter and where we see continued upside for long-term advertising growth. Over the last few calls, I have consistently highlighted how we're putting Google AI to work for our customers to deliver profitability and help them achieve their goals in a do more with less environment. From a product perspective, in Q4, Performance Max remained a bright spot. We're also excited about demand gen momentum. This is our big bet to help social advertisers find and convert consumers via immersive, relevant visual creatives across YouTube, including YouTube Shorts, Gmail, and Discover. In a single campaign, you get access to over 3 billion users as they stream, scroll, connect, and decide what to buy. Tens of thousands of advertisers are testing, and on average seeing 6% more conversions per dollar versus image-only ads and discovery campaigns. As we look ahead, we're also starting to put generative AI in the hands of more and more businesses to help them build better campaigns and even better performing ads. Automatically created assets help advertisers show more relevant search ads by creating tailored headlines and descriptions based on each ad's context. Adoption was up with strong feedback in Q4. In addition to now being available in 8 languages, more advanced GenAI-powered capabilities are coming to ACA. And then last week's big news was that Gemini will power a new conversational experience in Google Ads. This is open in beta to US and UK advertisers. Early tests show advertisers are building higher quality search campaigns with less effort, especially SMBs, who are 42% more likely to publish a campaign with good or excellent ad strength. We can't wait to see how this continues to drive performance and level the playing field for advertisers of all sizes. As we shared last quarter, ads will continue to play an important role in the new search experience and will continue to experiment with new formats native to SGE. SGE is creating new opportunities for us to improve commercial journeys for people by showing relevant ads alongside search results. We've also found that people are finding ads either above or below the AI-powered overview helpful, as they provide useful options for people to take action and connect with businesses. Looking at our strong search performance for the fourth quarter, retail was a highlight. We continue to see a stronger start to the season, up to and including Cyber 5. In Q3, we indicated that we were seeing early trends of consumers being very price conscious, and we saw this play out in Q4. With promotional demand at an all-time high, deal seekers using Google had access to 2 times the deals in the US versus last season, as well as a better shopping experience. Launches included a one-stop shop deals destination, new filters like Get It Fast, and AI-generated gifting recommendations in SGE. These new features drove incremental query growth during key shopping moments like Cyber 5. Our proven AI-powered ad solutions were also a win for retailers looking to accelerate omni growth and capture holiday demand. Quick examples include a large US big box retailer who drove a 60% plus increase in omni ROAS and a 22% plus increase in store traffic using Performance Max during Cyber 5. And a well-known global fashion brand who drove a 15% plus higher omnichannel conversion rate versus regular shopping traffic by showcasing its store pickup offering across top markets through pickup later on shopping ads. Moving on to YouTube. We're obviously pleased with YouTube's advertising revenue growth in Q4 and also significant growth in our subscription revenue. I'll reiterate what I have said before. YouTube success starts with creator success. We give millions of creators more ways to create content and connect with fans, and more ways to make money and build their own businesses than any other platform. More creators means more content, which leads to more viewers, and via ads and subscriptions, these viewers fund our creators and drive the eyeballs and engagement our advertisers want. To keep this momentum going, we're focused on delivering value across 4 pillars: creation, viewers, monetization, and responsibility. First, creation, which increasingly takes place on mobile devices. We've invested in a full suite of tools, including our new YouTube Create app for Shorts, to help people make everything from 15-second shorts to 15-minute videos to 15-hour live streams with a production studio in the palm of their hands. GenAI is supercharging these capabilities. Anyone with a phone can swap in a new backdrop, remove background extras, translate their video into dozens of languages, all without a big studio budget. We're excited about our first products in this area, from Dream Screen for AI-generated backgrounds to Aloud for AI-powered dubbing. There's more to come. Number 2, viewers. We continue to grow watch time across YouTube with strong growth in Shorts and connected TV. Shorts remains a top priority. We have 2 billion plus logged in users every month, and we're averaging 70 billion in daily views. Connected TVs, or what we refer to as the living room, is where viewership is growing the fastest. We're investing to make this experience even better with interactive features tailored to TVs, plus the content people love. Our creators, NFL Sunday Ticket, and a range of live sports and studio content via YouTube TV and primetime channels. Put this all together, and YouTube is the must-have app on every connected TV. Monetization is pillar number 3 and realized through a combination of ad-supported and subscription offerings. Advertising generates the bulk of our revenue, and we continue to invest heavily here. We've rolled out CTV-first formats like 30-second non-skippable ads and pause experiences, as well as an industry-first send-to-phone experience that lets people use a second screen to engage with ads. For Shorts, we've developed new formats that are less interruptive to viewers. It's early, we're learning, but excited by the opportunities for ads this can unlock. Shorts monetization continues to progress nicely. Our AI-powered video formats, from video reach and video view campaigns to demand gen and video action, continue to make advertiser dollars go further and drive results across the funnel. We're also introducing new and existing advertisers to YouTube via sports content. 90 plus upfront and scatter advertisers, including Unilever, are partnering with YouTube in our first year across NFL Sunday Ticket in-game advertising opportunities. Our subscription offerings are also growing at a healthy clip. YouTube Music and Premium performed well. Premium users are delivering more value to our partners and YouTube than even ad-supported users do. On average, each additional Premium sign-up boosts earnings for creators, music and media partners, and YouTube itself. And we've made Premium even more attractive with new features, bundles, and other enhancements. We're also pleased with our first season of NFL Sunday Ticket. It gave creators new opportunities to create content and feed user engagement across traditional user content and professional sports content. Feedback on the user experience, including multi-view, has been great. We're excited to continue to innovate here. Responsibility is our fourth pillar, and it underlines everything we do across YouTube. We'll continue to focus relentlessly on this. As always, deepening our relationships with key partners to bring them the best of Google is a key priority for us, and we continue to do this across industries in Q4. We just talked about the NFL. Sundar mentioned Samsung, among others, earlier. Another highlight was our expanded partnership with Porsche to enhance customers' digital experiences with a deeper in-vehicle integration of Google built-in services, including Google Maps and Play. Whether it's continued collaboration with our partners and key ecosystems, or putting Google AI to work for more customers, I'm excited about the opportunities for continued impact in 2024. I'll wrap with a huge note of gratitude to our customers and partners. Our success is only possible because of their success, and then to our Googlers for their outstanding work and focus this year. Ruth, over to you.
Thank you, Phillip. We are very pleased with our full year results, with 2023 Alphabet revenues of $307 billion, up 9% versus 2022, which added $25 billion to revenues for the year. We ended with a strong fourth quarter, with consolidated revenues of $86.3 billion, up 13% versus last year in both reported and constant currency. Search remained the largest contributor to revenue growth. My comments will be on year-over-year comparisons for the fourth quarter unless I state otherwise. Total cost of revenues was $37.6 billion, up 6%. Other cost of revenues was $23.6 billion, up 5%, with the increase driven primarily by content acquisition costs associated with YouTube subscription offerings. The growth rate also reflects the offsetting benefit of lapping $1.2 billion in inventory-related charges that we called out in the fourth quarter last year, as well as a reduction in depreciation expense due to changes in estimated useful lives we made starting in the first quarter of 2023. In terms of total expenses, the year-on-year comparisons reflect an additional $1.2 billion in exit charges that we took in the fourth quarter of 2023 in connection with actions to optimize our global office space. As you can see in our earnings release, these charges were allocated across the expense lines in other cost of revenues and OPEX based on associated headcount. Operating expenses were $25 billion, up 11%, primarily reflecting an increase in R&D expenses, which were driven by the real estate charges, followed by compensation. Operating income was $23.7 billion, up 30%, and our operating margin was 27%. Net income was $20.7 billion, and EPS was $1.64. We delivered free cash flow of $7.9 billion, which was affected by the timing of the $10.5 billion tax payment we made on October 16th that we called out previously, related to the deferral of certain tax payments to the fourth quarter. For the full year 2023, free cash flow was $69 billion. We repurchased a total of $62 billion of our Class A and Class C shares in 2023 and ended the year with $111 billion in cash and marketable securities. Turning to segment results, within Google Services, revenues were $76.3 billion, up 12%. Google Search and other advertising revenues of $48 billion in the quarter were up 13%, led again by growth in retail. YouTube advertising revenues of $9.2 billion were up 16%, driven by both direct response and brand advertising. Network advertising revenues of $8.3 billion were down 2%. Subscriptions, platforms, and devices revenues, which we previously referred to as other revenues, were $10.8 billion, up 23%, primarily reflecting growth in YouTube subscription revenues. TAC was $14 billion, up 8%. Google Services operating income was $26.7 billion, up 32%, and the operating margin was 35%. Turning to the Google Cloud segment, revenues were $9.2 billion for the quarter, up 26%. We're very pleased with the momentum of GCP with an increasing contribution from AI. Google Workspace also delivered strong revenue growth, primarily driven by increases in average revenue per seat. Google Cloud delivered operating income of $864 million and an operating margin of 9%. As to our other bets for the full year 2023, revenues were $1.5 billion and the operating loss was $4.1 billion. Results in the fourth quarter benefited from a milestone payment in one of the other bets. Turning to our outlook for the business. With respect to Google Services, first within advertising, we were pleased with the sequential revenue growth of search and YouTube advertising throughout 2023, which reflects the extraordinary work across our teams to drive improved experiences for users and attractive ROI for advertisers. As we enter 2024 with advertising revenues of more than $100 billion higher than 2019, we remain focused on sustaining healthy growth on this larger base. Second, within subscriptions, platforms, and devices. Our total revenues from subscription products reached $15 billion for the full year 2023, driven primarily by substantial growth in subscribers for our YouTube subscription offerings. The substantial increase in our subscription revenues over the past few years demonstrates the ability of our teams to deliver high value-add offerings and provides a strong base on which to build, including through YouTube and newer services like Google One. Play had solid growth again in the fourth quarter, driven primarily by an increase in the number of buyers. In devices, we continue to make sizable investments with increased emphasis on our Pixel family, particularly with AI-powered innovation, while driving further efficiencies across the portfolio. Turning to Google Cloud, we are pleased with operating performance in the year. Full-year revenues of $33 billion were up 26% versus prior year, ending with strong Q4 performance. The cloud team is intensely focused on bringing the benefits of Gemini, our industry-leading AI technology, to enterprises and governments globally, and we are gratified with the level of engagement. The strong demand we are seeing for our vertically integrated AI portfolio is creating new opportunities for Google Cloud across every product area. In terms of profitability, the improvement in 2023 reflects sustained focus across the team with the intent to maintain healthy profitability while we continue to invest to support long-term growth. Turning to margins and expenses, as we have repeatedly stressed, we remain committed to our framework to durably re-engineer our cost base as we invest to support our growth priorities. Key contributors to moderating our expense growth include, first, product and process prioritization to ensure we have the right resources behind our most important opportunities and to reallocate resources where we can. Second, organizational efficiency and structure. We're focused on removing layers to simplify execution and drive velocity. Both product prioritization and the organization design efforts result in a slower pace of hiring, as you can see with our headcount down year on year, reflecting the reductions we announced in the first quarter of 2023 and a much slower pace of hiring. We will continue to invest in top technical and engineering talent. Finally, we continue to execute the other work streams to slow expense growth, including improving efficiency in our technical infrastructure, streamlining operations across Alphabet through the use of AI, increasing efficiency of our spend with suppliers and vendors through our central procurement organization, and optimizing our real estate portfolio. With respect to CapEx, our reported CapEx in the fourth quarter was $11 billion, driven overwhelmingly by investment in our technical infrastructure, with the largest component for servers, followed by data centers. The step-up in CapEx in Q4 reflects our outlook for the extraordinary applications of AI to deliver for users, advertisers, developers, cloud enterprise customers, and governments globally, and the long-term growth opportunities that offers. In 2024, we expect investment in CapEx will be notably larger than in 2023. With regard to other bets, we've been working to sharpen our investment focus while capturing the upside, given compelling technology breakthroughs across the portfolio. For example, last week, Alphabet's X announced that it would be moving to spin out more projects as independent companies through external capital, giving X the opportunity to bring more focus to the breakthrough technologies it is working on to address some of the world's most pressing challenges. Thank you. Sundar, Phillip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. And our first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Great. Thanks for taking my questions. I have two for Phillip. Phillip, the first one is about sort of a lot of the new generative AI advertising tools. You obviously have a lot of irons in the fire here, even talking about some of the early momentum with tens of thousands of advertisers. The question is, can you sort of walk us through some of the hurdles and gating factors that we should be thinking through that dictate the pace at which these tools can really be rolled out broadly, just so we and advertisers can kind of get an understanding for when they could have a bigger impact on the whole business? And then secondly, how do you think about the long-term sales force intensity of the advertising business as you roll more AI-based tools like PMax impacting the overall ad allocation? Thanks.
Yeah, thank you. Thank you so much. So I've covered this a little bit on previous quarters. AI has been at the core of our advertising products for a very, very long time. And the recent advances are really allowing us to derive more value for advertisers across a large range of different areas, bidding, targeting, creative, as well as our core advertiser and publisher experiences. We are seeing in core search ads, for example, the bidding side, the value-based bidding as a very significant one. On the targeting side, the broad match. On creatives, responsive search ads, automatically created assets. And we're very happy with the progress we're seeing in those areas. I think I mentioned in one of the previous calls that one, you asked about hurdles and gating factors. The AI essentials play a huge role in this, trying to get everybody ready to really take full advantage of those tools. We talked about the progress on PMax as well, that we were very happy with in Q4. So overall, I think we're on track with what we're expecting here. On the Salesforce intensity side, we have done a few reallocations, or let me call it portfolio adjustments. As you know, we have two large different teams. One is our LCS, a large customer solutions team that's really focused on transformational growth for our largest and most sophisticated customers. And we have our, we call them GCS, Global Customer Solutions team, which is the channel where really every customer starts, from some of our largest customers now to also the millions of smaller ones and SMB. SMBs. The GCS is really then scaling growth by dynamically delivering really the right treatment for every customer. And important to note, it's also our fastest growing channel, and it delivered particularly strong growth in Q4. So we have done adjustments here to focus more resources on the GCS side. But I also want to be clear, when we restructure, there's always an opportunity to be more efficient and smarter in how we service and grow our customers. We're not restructuring because AI is taking away roles. That's important here. But we see significant opportunities here with our AI-powered solution to actually deliver incredible ROI at scale. And that's why we're doing some of those adjustments. So I look at Salesforce intensity as a stronger focus going forward on the channels I mentioned here.
Great. Thanks, Phillip.
Our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks for taking the questions. One for Ruth and one for Phillip. Ruth, you're now into year 2 of durably re-engineering the cost structure. Can you just help us assess your progress so far, and are there any guideposts that we should be thinking about going forward? And then Phillip, can you talk more about NFL Sunday Ticket and just what your key learnings were in year 1? How are you thinking about the returns on the investment on both, from an advertising perspective and then also subscribers to both Sunday Ticket and YouTube TV? Thanks.
Thanks for the question. So we are very pleased with the progress we're continuing to make, and we are very committed to the framework to durably re-engineer our cost base, really as we're investing to support the growth priorities. I tried to call out a number of them in opening comments, but really as you're looking at the work being done across Google, across Alphabet, it does start with product and process prioritization to make sure we've got the right resources behind the most important opportunities, and then that creates the opportunity for reallocating resources where we can. Then we talked a lot about this quarter about organizational efficiency and structure, and we're focused on removing layers to simplify execution and drive velocity. The combination of those two, product prioritization and organizational design work, has resulted in the slower pace of hiring. You can see that in our headcount numbers down year on year. You can see it in some of the results that we delivered in the fourth quarter. You can, and it also goes to the announcements around first quarter and much slower pace of hiring. At this point in the quarter, we do estimate that severance-related expense will be roughly $700 million in the first quarter as we've continued these efforts. But as I said in opening comments, we will continue to invest in top engineering. So that's sort of the big one if you start with product prioritization and organizational design, which is why I also made the note about the severance-related expense, which helps pave the way as we're continuing to do the work that we're doing. But then we have a host of other work streams, which I talked about, everything with improving efficiency in our technical infrastructure, which is a very large ongoing effort, streamlining operations across Alphabet through use of AI, all the work we're doing with our suppliers and vendors, the work we're doing optimizing our real estate portfolio. So when we've described durably re-engineering, it's about continuing to build on work that started, and that is ongoing.
So on the NFL Sunday Ticket side, look, as I said earlier, NFL Sunday Ticket supports our long-term strategy and really helps solidify YouTube's position as a must-have app on everyone's TV set. You ask about some of the learnings. Maybe I start with the viewing experience. We've received great feedback so far. People like the navigation, multi-view, the chat, the lack of latency. Really, really positive feedback on this one. You ask about the ads and the subs. Maybe I start with the subscribers. We're pleased with the NFL Sunday Ticket signups in our first season, both as part of the YouTube TV bundle and as a standalone offering on YouTube primetime channels. Remember, you can access them via both. Nothing more to share on the sub side today on this one. On the ad side, as you know, advertisers can buy from an NFL lineup as part of our YouTube Select portfolio. And this actually allows advertisers to reach football fans across YouTube's pretty unique breadth of NFL content, independently of whether you're viewing live NFL games or on YouTube TV or primetime channels, or watching NFL highlights or post-game commentary on YouTube channels. And we saw solid demand across the ad market around our YouTube Sunday Ticket offering here. We're excited about the partnership ahead, or the partnerships ahead. This is our first season. And I mentioned over 90 upfront and scatter advertisers partnered with YouTube in our first year across NFL Sunday Ticket in-game opportunities, which we really appreciate.
Thank you both.
Our next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you for taking the questions, too, if I could. Sundar, a bigger picture question coming back to your comments earlier in the call on search generative experience. When you think about the evolution of product over the next couple of years, how do you envision more traditional search and things like the Google Assistant continue to evolve in a world of search generative experience and Bard, and what that might mean for elements of commercial and non-commercial search and how use cases might change in the years ahead? And then, Ruth, I just wanted to make sure we understood some of the messaging from the release and the public comments around one-timers in the quarter itself. It seems as if they were not allocated to the segments, but are more elements of other bets and Alphabet level activities. I just wanted to confirm where elements of those one-timers were captured in the P&L statement, and whether there were also any elements of legal one-timers that would be called out this quarter as well. Thank you.
Thanks, Eric. Great question. Look, it is an exciting time. Clearly, as I said, as we are incorporating SGE in the product, the early feedback is positive, and we've been iterating on it, and it clearly works for certain type of queries very well. We are expanding the set of queries where it works very well. It definitely is answering a certain category of queries for the first time in a better way. So that gives us direction to proceed as well. Overall, one of the things I think people underestimate about search is, the breadth of search, the amount of queries we see constantly on a new day, which we haven't seen before. And so the trick here is to deliver that high quality experience across the breadth of what we see in search. And over time, we think Assistant will be very complementary, and we will again use generative AI there, particularly with our most advanced models in Bard, and allows us to, act more like an agent over time, if I were to think about the future, and maybe, go beyond answers and follow through for users even more. So that is the directionally what the opportunity set is. Obviously, a lot of execution ahead, but it's an area where I think we have a deep sense of what to do, and all the work we have taken so far, the feedback has been super positive.
And then in terms of your other question, so on the real estate charge, the $1.2 billion in exit charges related to real estate, that is in Alphabet level activities. But the other comment I was making in opening comments is where when you go through the various line items, R&D, et cetera, you see it spread there, and we have a table, and IR can walk anybody through the technicals on that just to understand how it then gets arrayed across the various lines in the P&L.
Our next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. I have two for Phillip, I think. Given the importance of connected TV engagement in YouTube, can you talk about the opportunity outside the U.S. for connected TV and what the company is doing at large to drive more adoption of YouTube or connected TVs, given the Google operating system? So anything you talk about outside the U.S.? And then you've been consistent about the strength of Shorts over the past year. You talk a bit about the monetization challenges. Do you still see the headwinds that you saw at the beginning? Anything you could share about the density of the auction or advertising interest on Shorts? So help us with whether or not that's still a headwind to growth. Thanks so much.
Yeah, thank you so much for your question. On the connected TV side, I mentioned it actually continues to perform really well. I said before, YouTube is the leader in US streaming watch time, and it's not just one audience group diving deep. It's really all audiences. On the international side, it's something we are closely looking at. There's nothing specific I have to add at this moment in time on this one. On the Shorts monetization side, look, we built Shorts to respond to the huge demand from both creators and viewers for short-form video, and we're very pleased with the growth we've seen. I mentioned 2 billion plus logged-in users every month, 70 billion in daily views. Specifically to the monetization question, Shorts monetization continues to progress nicely. In fact, actually, since we introduced revenue sharing for Shorts, the total creator earnings generated from Shorts have increased every month, and we expect this to continue. And similar, obviously, to our long-form videos, we're really committed here to a long-term partnership. And you heard me say this before, right? When creators succeed, we succeed.
Thanks, Phillip.
Our next question comes from Stephen Ju with UBS. Please go. Your line is now open.
Okay, thank you so much. So, Phillip, this is not a new question, but it's also been about 2 years since PMaps was launched. But it seems like there's been this long lineage of product development and rollout of things like smart bidding in your history, which I believe at the time was designed to help smaller advertisers more easily run search advertising. And today, you're helping me generate creatives as well as manage my spend and maximize ROI across multiple Google surfaces. So, how are you feeling about enabling SMBs who otherwise could not advertise with you before? And what kind of TAM expansion tailwind does that create for your revenue growth over the longer term? Thanks.
Look, as you know, SMBs are a huge focus for us. We mentioned this several times before. They're part of our GCS channel. Not only there's more in this, but they've been under a ton of change over the last few years, and our focus has always been here on investing in solutions that really help level the playing field. And you mentioned several of those. So actually, SMBs can compete with bigger brands and more sophisticated advertisers. And so the feedback we're always getting is they need easy solutions that drive value quickly, and several of the AI-powered solutions that you're mentioning are actually making the workflow and the whole on-ramp and the bidded targeting creative and so on. You mentioned it is so much easier for SMBs. So we're very satisfied with what we're seeing here. We will continue to invest, and I feel AI is really a helpful, very interesting future path to make life not only easier, but also much more productive and better ROIs over time, more level playing field for SMBs.
Our next question comes from Justin Post with BAML. Your line is now open.
Great. Maybe one for Sundar and one for Ruth. Just on search growth, I think there are some concerns on use of competitive AI tools as an alternative to search. Just wondering if you've seen any changes in query volumes, positive or negative, since you've seen the year evolve and more search-generated experiences, and what can really make Google stand out versus other AI tools. And then, Ruth, CapEx was $11 billion, a step up, obviously. Any one-time items in there, or is that how we should think about the new run rate into 24? Thank you.
Thanks, Justin. First of all, look, we think about effects on search, obviously more broadly. People have a lot of information choices, and so and user expectations are constantly evolving. And so we've been doing this for a long time. And I think what ends up mattering is a strong, continuous track record of innovation. Obviously, generative AI is a new tool in the arsenal, but there's a lot more that goes into search, the breadth, the depth, the diversity across verticals, the ability to follow through, getting actually access to rich, diverse sources of content on the web, and putting it all together in a compelling way. And I think through the year two, when we test search generative experience, particularly against everything that's out there, and we can see the progress we are making and how much users are liking the experience better. And so I think, feel very good about the progress, and our roadmap for 24 is strong, both on the search and the underlying AI progress, including the models. So I'm pretty excited about what's ahead of us in 24.
And
Okay, guys, so we're going to go ahead and pivot to Microsoft earnings. So Microsoft's earnings call is about to start right now. And so, again, we're going to go ahead and get on over there. It starts in about 9 minutes or so, 9 minutes. So we're going to bring everybody go over there. Again, you shouldn't have to go anywhere. As soon as we close down this live stream, it should immediately bring you to our Microsoft earnings call. And so, again, you shouldn't have to go anywhere. As soon as we close down this stream, it should immediately pivot you to the Microsoft earnings call. What's up, Microsoft earnings team? We're going to go ahead and go over there now. Again, we have redirect set up. And so we'll see you guys over there. We're going to go ahead and end this and go straight to Microsoft earnings right now. So, yeah, we'll see you over there.